Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Welcome to the Conscious Day Trader. Today we're going to go over a live trade I did this morning at the London Kill Zone with the ICT method, and also how I managed it with the Scruffy Madness from the Scruffy Trader. And what we're going to look at is from the open, how I marked the chart and how I identified the entry, how I managed it through until 11 o'clock and killed the trades with profit of $300 before commissions. And let's jump on TradingView and see how we did that. And what we're going to see is that we've already got our drawings in, and for the ICT familiar crowd, they will know exactly what the terminology is. If you don't, like the FVG, which is fair value gap, if it's something new that you haven't heard before, I would recommend you going and doing the mentorship. The 2022 mentorship is free on YouTube from the ICT. We're going to use the replay, and we're going to go back to this morning's open, and specifically 7 a.m. and we're gonna see how we mark the graph. So every day I start on the daily. ICT also recommends this, so let's go on the daily to get a bias. And what you'll see is that the pound has been continuous rising from the 103 back in 26th of September, and we did identify earlier in the week, 2 weeks ago, that this area will be buy side liquidity. So people that were going to go short, they would have their stops there, and the algorithm will want to take them out before they go lower. Now this morning, what we were on this candle here, this red candle, and we took the open and the close of the previous day. If I zoom in to this area here, we've got the previous day high and the previous day low highlighted on the graph, and we saw that the previous day high broke above. That was the first indication. Now, what was I looking at in terms of bias? What I noticed was that this area here had broken, and liquidity would be going down, especially for this area here with a sell side liquidity, because so far until and today, I can't remember when I see if it actually broke this area, but this sell side liquidity, so the people that I've got buy stops here, hasn't been tested yet. And my philosophy was that if the price is going to open higher, I'm going to find a fair value gap area, and then I'm going to short it into the area of the sell side liquidity. Because the market can do three things actually. It can go and find sell liquidity or buy side liquidity, or it can consolidate. And we're on the bottom side of that big move that happened last week. So it would make sense for the market to move to clear the sell side liquidity before it does either consolidation or goes higher. So that's in mind, that in an ideal scenario, we want the open to open high, and then we short it into the sell side liquidity. So let's go to the 4 hour, actually the 1 hour. So what I've marked here on the 1 hour, it will look a bit messy, but I do want to show you these things. The red lines behind are, I combined the Scruffy Trader levels. So these are like monthly levels, the strong levels, which gives me another indication if the price is going to reverse at a certain area. And what we can see here, we had a big fair value gap. I don't want to move anything in case it makes sense on the lower frames. But you can see if we add let's add one of these. So from this candle here to that candle there, this area here, we've got a fair value gap. and that was the area where I deemed to be targeting. And the reason is, if you look at the previous day high, you can see multiple touches on this level. So it would make sense for the algorithm, if it's going down, to first go up, take out all the previous highs, the day highs, and then continue down to the area that we looked on the daily, which is the sell side liquidity. So that was the plan. Let's see what happened to the price. Before we start though, let's talk about the 15-minute and how what I did also to indicate was the first high and the low of the before the open. So I draw can't speak today. I draw the line on this high here and the first low on the left side. So we'll see which side breaks, either on the low side or the buy side. If it broke down and it broke this structure, then my idea would be not valid, and I would be looking for something else, either in the New York session, or I would have to go back to the daily bias to identify an area where I could either short or buy. So let's play a candle down. So it started coming down. This is 7:30. This is London time, and here we go. So this is where I played this. My main play was short, okay, but I was confident that the algorithm will want to take these previous daily highs before it makes the official move. So the play was buy it all the way to the risk to the buy side liquidity, and then change and sell it down to the sell side liquidity. So my first point was this field. I was looking for, as soon as it broke this level here, this high, I was looking for a fair value gap in these candles here. And if you're wondering what equilibrium is, it's from the daily. It's a fib from the high and the low, and it's the middle ground where the prices below would be discounted and the price above would be premium prices. So we would want to be selling on premium price and buying at discounted price. So as we can see here, the price broke structure at this area here, and then I was waiting for a fill, and I got a fill here. And I always started with a small one because there was another fair value gap. I believe I did this on the 3-minute. So you can see on the 3-minute here, that fair value gap there, and that fair value gap there. So I bought here 0.25 and then 0.5, my main position. I had two positions. Let's add this with the arrows. So I had one on the top of this, take the magnet out, one on the top of this, and another one on the top, I think roughly around the bottom of this. So I was quite happy with these fills. My stop was below this low here, with the aim to hit these highs here, especially, that's on the downside, with the aim going higher into the buy side liquidity. So let's see what happened. I went up, all the way up, and I got out at this high here, and I took, I think, $65 on a 0.5, so 10 pips, and 10 pips on the 23, on the 0.25, so roughly around 25 pounds. I was $80 up at this stage, which was putting me nicely into my main setup, which was shorting from buy side liquidity. So as soon as this broke, I was interested to sell it down to here for the reasons that we talked earlier. But if we look on the hour, we can see that more clearly. We have gone into this fair value gap here on the hourly, and my thoughts was that this is going to come up here to fill the whole fair value gap. So I got a small fill here, again 0.25, and let's see what happened. It crashed down and I took some profit. Okay, so as we can see, the price went all the way up to these monthly levels. And what I did, if we go into the 3 minute value, I think I did it on the 1 minute for this one. What we're going to see, if we go back to that, we went all the way up and it came down and broke these intermediate swing low and created a value gap on the left side here. So I was waiting for it, the price, even though you could see it going away, you're like, you've missed the move. That is the rule. You wait for the fair value gap to present itself, and that's when it's a good position to take the trade short. So the price came back up and I took my positions here and I let it run to this price here. Someone will say, well, why didn't you take it here? And why did you know that the price is going to go there? I knew that the price is going to go here because as soon as it broke this level, it was going to fill this fair value gap here. And it did. It even went further. And look at these trades. The more I'm doing and the more confident I am to keep them running, because they would go all the way down to equilibrium. Something to work on in the future. But I took my profits here. Hence size, it looks like a small target, but it's good 10 pips on each position. So about 40 to 50 pips on this move and another 20 pips on the upside. So I was super happy with that. And if you want to see the profits of the today's trading, there we have it. We had $300 and it was 28762 after commissions. So these were the positions. They were all more than 10 pips. So 50 to 60 pips. Super happy with that. And it's Christmas week, so trading will be slowing down as we are moving closer to Christmas, and a lot of people, the volume will start to decrease as well. But I will trade this week and see. I'm trading live tomorrow with Traderlicious. If you're not following his YouTube channel, we're going to be live on the London session at 10 a.m. Central Eastern Time. That's in Italy. And you can see us doing all this live. So I hope I see you there. Also subscribe if you haven't, and make sure you like this video so I can make more of them. See you in the next one.